Hit it. It's August 14th, 2020, episode 92. I'm Patrick Ceresna.
And I'm Kevin Muir. This week we welcome Steve Van Metre from Atlas Financial Advisors. Steve joins us to walk us through his deflationary macro forecast. Then we have the pleasure of welcoming to the show the enlightening Julia Cordova, where she tells us her 3 favorite trades and explains why Nathan the Lizard is one of her favorite indicators.
And then in This Week in Trading History, we talk about John Merriweather. And then even though Taylor is on vacation, he did prepare a pretty epic WTF Clip of the Week for us. So stick around for that. And then we cap it all off with the top 3 things to watch next week. And well, Kev, we might even drink some beers along the way. So stick around. We've got a great show. Let's get to our first interview.
Steven Van Metre, certified financial planner professional, is a representative with Atlas Financial Advisors. Steven is a financial planner, portfolio manager, and president of Steven Van Metre Financial. He specializes in retirement income strategies and the direct management of client assets. Steven designed a planning process to help clients understand, prepare, and become active participants in creating their own retirement plan. His process helps people understand what their retirement will look like and what they need to do to make their retirement goals come true. Over the past 15 years, Steven has coached many people through to a completely successful retirement.
Hey, Steve, welcome to the show.
Hey, thanks for having me on, Patrick.
It's Kevin here. Steve, I'm going to jump in with the first question. When we were chatting before the show, you said you were a 100% self-taught regular dude. I thought that was a great way of describing yourself. So why don't you take us through your story and how you became this regular dude with the YouTube following and the kind of the devoted fan base that you have?
Yeah, my only experience to the world of investing in college was I took a class on microeconomics, and I really didn't find it too interesting. The way I actually got into this business is my first wife filed for divorce.
Okay,
it's a
now
true
get
story.
you started.
It's very true. It's actually what happened. So I was doing computer networking, and I lived in Indiana at the time. And I'd been married about 2 years, and I come home one day, and I don't think she was supposed to be home at that time, but she had just started a new job, so I'm not really sure what was going on. And she said, "I have a surprise for you, and it's in the bedroom." Now, I don't know about you guys, but when your wife says that she's got a surprise for you and it's in the bedroom, there's really no downside risk to where this is going. So I'm like, hey, great. This day's getting better and better. So we go into the bedroom, and there's an envelope on the bed, large, manila envelope. And that really wasn't what I was expecting in terms of possible surprises my brain had concocted at that point. And she said, open it. And so I open it up, and inside there's divorce paperwork. Now, you have to keep in mind, I didn't know what divorce paperwork looked like. I was 25 at the time. I had no idea. And I had to ask her, what is this? She says, it's divorce paperwork. And I said, you've got to be joking. She goes, no, it's dead serious. It's real.
Oh, God.
And
so, Steve, when you were telling that story, when it started off, all I could think about was when you said I came home in middle of the day and surprised my wife. That scene from Old School.
No. I got off work at normal time, but I think she was working some odd hour with this new job, so I wasn't expecting her to be there.
But that scene from Old School when he comes home and she's in the bed and then it ends up being there's another couple in the closet. That's what I was worried about. So it definitely was better than that. So you're faced with this kind of bolt out of the blue, a big change. How does that end up being the impetus for you to go out and get into the investment business?
So my dad had recently retired a couple years before. He was 53, and so when my choice was either to pretty much say goodbye to my family for the rest of my life or accept the divorce. And 2 weeks later, my dad flew out. I was given my notice, packed all my boxes that I could send in boxes, loaded up my car, and we drove back to California, where I was raised and spent most of my life. And we got back to California because I had experience in the computer industry. A good friend of our family was the assistant district attorney for the local county. And he said, you can come work for me. I can get you a job. I can get you through all the headaches. And my dad said, I'd really like it if you'd come and do 403Bs with me. I just started doing it, and it looks kind of interesting, and I'm making some pretty good money at it. And why don't you do that for a while? And if you don't like it, you can go work for Steve.
Right. So why don't you explain? We're Canadians. I had to Google 403B. Why don't you explain for the other non-Americans what it is?
A 403B is a retirement plan for what we used to say teachers and preachers. And so you would only find it generally in churches, nonprofits, but predominantly in schools. And what made it interesting, at least here in California, is school districts would have a list of investment providers. So unlike a 401k where there's one company, there might be 10 or 30 companies, and you could go get appointed with the different insurance companies, or if you're securities licensed with the securities companies, and you go out and do your marketing, and you could get clients that way.
So here is a computer guy, a network guy that's recently divorced, goes home to California, and next thing he knows, he's selling investment products to preachers and teachers. How do you go? What's the next step? Like, how do you end up? Where do you go from there?
Well, it turned out my dad had a great marketing idea, and we actually did pretty well. We're making really good money, and it didn't take long for me to figure out that in the hierarchy of financial advisors, someone who is a 403B rep is relatively low on that totem pole.
It's below equities in Dallas.
Yes, exactly. And so I thought, well, there are people that were out there making more money doing these big rollovers. And I remember at the time, if we got $100,000 rollover, it was like, man, you should pop the champagne. This is like the biggest thing. And it didn't happen hardly at all. But we knew there was these people out there. Well, the insurance industry is very interesting. If you're willing to agree to give someone an override, well, they will teach you their system. And the fact they advertise in magazines and mailers, I'm sure many of your listeners are familiar with. And so I hopped on planes and traveled around the country and met with top producers, because as far as we could figure out, the only way to get into the rollover business was to do dinner seminars, because we didn't really know anything else. I mean, that's just what we knew. And so next thing you know, I figured out that these people doing dinner seminars were marginally better than me in terms of their hierarchy. They just did a lot more business, and people were more convinced that they were experts, even though I quickly figured out by talking to them, they're just really slick salesmen in most cases.
I think that's like most of Wall Street.
Yeah.
Well, I didn't know any Wall Street people then, so it didn't matter.
That's right. So you go and you start doing this with your dad's company, or the two of you, and this ends up being a success?
No, that didn't last long, because we just really felt like we were trying to force annuities down old people's throats, and that is how you make money generally in the dinner seminar business. And that wasn't our style. We're computer people. We like to look at numbers, and if it makes sense, it makes sense. You should do it. If it doesn't, you don't. Well, when you're dropping $5-10 grand on seminars, it doesn't matter what it is. You need to sell it. So he had an idea to teach a college class about financial planning, because he had taken one when he gone to one. I think he was probably in his 30s or something. He got invited to one, and he said, "That's a great way to get clients. We should do that." As you're about to guess, we didn't know anything about that either.
So you guys, even though you didn't know anything about it, you didn't stop you from teaching these seminars?
Look, I mean, I guess you got to be smart enough to tell yourself that's a bad idea, right? So we thought, okay, I wasn't convinced, but he's like, no, we should do that. And so we did our first one, and 3 people showed up, and that didn't go very well. So one day, as fate would have it, a variable annuity wholesaler comes to our office, because, when you're not busy, you get calls for people to come visit you. Sometimes they buy you lunch, which is even cooler. And he gives you somebody to talk to. So this lady shows up, and she says, "I'd like, your business," typical wholesaler. And I look at her from across the conference room table. I say, "Look, I'd be happy to give you some business, but you need to help me get some, because I don't have any right now." And she goes, "Well, what do you want to do?" I said, "Well, we're trying to do these college classes, but they're not going very well." And she says, "Really?" She goes, "My husband teaches college classes like you're talking about down in the Los Angeles area," which is about a 90-minute drive from where we're at here in Bakersfield. And she goes, "I'll tell you what, I will make an arrangement for him. You and your dad can go down there, sit through 3 of his classes. I think there were 2 night classes, And then, or maybe there's 3, I don't remember. And she goes, I'll pay for the dinners from my wholesaling budget. He'll teach you everything he does step by step from the classes. And you can learn and do them yourself. And we're like, what? Who does that? And sure enough, he did. So we went down. He showed us everything he did, from marketing to the classes. We sat through them. He explained everything, step by step. He even invited me down to his office to show me how he runs his appointments. And I was amazed. The guy was booked 6 months in advance. So people would come in there and they say, well, I'm retiring soon. I need to roll my account over. When are you available? And he would say, I'm available in 6 months. And they say, okay.
Wow.
And I'm like, wow, I want some of that. This thing's really good. And so we went home and we didn't know anything about the class he was using would turn out was a very old class, and who knows how he acquired it, but it wasn't available. So we found a company that was licensing their class in exchange for you paying to do their direct mail. And we said, well, that's fair. They probably know what they're doing. And so we got started doing that. And one of the gimmicks with the class is you have to give your students a binder full of the slides. And even though the material, in my opinion, was terrible, the class got, 30 to 50 people there. But the big issue we had was you had to pay for the binder with a check. So the students would have to bring you a check. Now, I don't know about you guys, but how many people use checks? Right? So next thing you know, people are wanting to give us cash. Well, the first thing you learn in this business is you're not supposed to take cash from people, because that might mean you're money laundering or something. So we were really adverse to this whole cash thing. And so my dad had this great idea. He goes, why don't we set up a PayPal account and people can PayPal us the cost of the book? And I was, hey, that's a great idea. So then I had an idea to set up a little web page. And I took the text right out of the flyer that this company was making. I even put their copyright. I put everything on there, and it had a PayPal link. And we thought, man, we are really smart, man. They're going to call us and be like, man, you guys are genius. And so I had them put this web link on the mailer. And one day, shortly thereafter, I get a call from their attorney who says that he is about to sue me for everything we have, and that my contract with them has been terminated. And I asked why, and he said, because of copyright infringement. And I said, well, I'm not really smart about that. So I said, what are you referring to? He goes, well, you have a website with our material on there. And I said, to which I referenced your copyright. And he says, it's too late. I am going to sue you unless you take it down in the next 5 seconds, and your contract's terminated, your class is canceled, and all that stuff. And that was probably one of the best things that could have ever happened for us.
Getting sued.
Yes. Well, he didn't actually sue us because he did take the website down, but he did send me a lot of nasty letters like, attorneys tend to enjoy doing. So we were about 45 days from a class, which we had booked the room. We had everything at the college campus all set up. And now we had no material because we couldn't use theirs. We had no mailer because they controlled it. And so my dad and I got together. He says, look, I got an idea for the marketing. I'll take care of that. You write a class. And so I wrote a class. He came up with a great marketing piece to put in as a newspaper insert. I wrote our first class, and I changed all the stuff about theirs I hated. And it was an absolute success.
Wow. That's a great story. What year was this?
I don't remember, but it was probably over 15 years ago.
Okay.
Right.
And so we went from there, and I kept improving the class, and we kept improving the marketing of the class to the point where I think we were, in terms of attendance, one of the top classes in the country. I would consistently get 50 some people. I mean, every time people would come, and it was incredible because, all I was doing was, they would ask questions. What about this? And my dad would sit in the back and write all these questions down. And then after the classes were over, we would take a look at the questions, and I would go back and somehow put them all into the material or adjust the material. We did quizzes to find out what people liked and didn't like. And we started just writing the class to what people would want to hear. And next thing you know, they were referring their friends, family, coworkers. I mean, it was incredible. The class just was a huge success.
So these are classes on financial planning.
Yes, it was a retirement planning class is what we called it.
What was the thing that surprised you the most about the questions that you got? What was, you came in it, you thought you had made this class, and then it ended up being that there was all these other questions that you had to adjust your material. What was the surprises there?
That I didn't know the answers to a lot of them.
Okay, but in
Well, I
terms
mean,
of
I didn't,
was there a
because you gotta
theme
understand.
from on the client side what they were asking for that you were like, oh, I didn't realize that people were confused about that, or were they specific issues?
Oh, they would, like, I have a section. The original class we licensed didn't talk about Social Security, which I thought was pretty strange because, well, most people here in the U.S. are on that. So I wrote a whole section on Social Security. What I wasn't anticipating was some of the questions I got were actually, they were outstanding questions, and I didn't know the answers, and I didn't have them in the material. And I realized if I didn't know this stuff, they would perceive me as not knowing this stuff, and I needed to know everything that they wanted to know and more. In fact, it kind of recalled that one day, and this guy's a great client of ours. I remember one day he called me and he asked me a question. And I said, I don't know the answer. It was about something going on in the markets. And he goes, Steve, one of the problems with you is I know more than you. And that after that day, I said, oh, that's ending right now. I will vow to know more than you. And today, the same guy calls me and says, what do you think is going on in the markets? And I tell him, he goes, that's good. I don't bother looking anymore. I just call you because you now know more than I do.
Well, that's
And
interesting.
that was the class. It was whatever you wanted to know, I had to know more. That was the whole idea.
So how did you jump from giving these classes to actually managing money and being abreast of the market? Like, what were the next steps in your career?
Well, I was securities licensed at the time, and the class would generate a lot of appointments because we'd offered to do, free financial analysis and all that fun stuff. And people would come in, and after 2 or 3 nights or whatever the class was, it was 2 and then became 3. And people said, Steve, I really like you. You seem really knowledgeable. I'd like you to manage my money. And I'm like, wow, I remember how hard it was to get someone to talk to me. And people were just, hey, we think you're really knowledgeable. And so I was securities licensed, and next thing you know, the business was growing. I was working my securities license. Now, this is another odd story. Was with the guy who taught the classes down in LA. He had a securities firm. He built from nothing to over 100 million. And so I had my license with him as a kind of a way to thank him, make a little bit of money for teaching us. And then one day I get a call from his son, who I'm not sure if I'd met before or knew, but his son was kind of managing the entity, so to speak, the RIA. And he called me, and there's a much deeper story that we won't get into, but essentially Dad was saying that either we follow his rules from now on or we leave and start our own firm. So he said, I decided that we're leaving and starting our own firm, and you're coming with me.
Nice. Okay, so you go there, and so and since then it's just kind of been more clients, and like, do you still teach the class?
Yeah, I mean, the class just kept, the class was awesome. I mean, I got on local radio shows, the newspaper started running articles I wrote. I mean, next thing you know, the class was something people wanted to go to. I think, I don't know, over 1,000 people or more. I can't even remember. We just stopped counting because it was a wild success, and no one in town could compete with us. So I was managing money, doing annuities, life insurance, the typical thing financial advisors do, and things were good, but my clients kept saying, Steve, this asset allocation thing, which is pretty much what most advisors do. And I had written I took this traditional asset allocation model and I wrote a whole piece for the class on how to build your own model, but I found out a way to enhance it so the returns were above average, not best, not worst, but above average. And so I started running that model, and clients started calling me and saying, hey, we're pretty happy, but Steve, I think you can do better. And, that's a problem when people start saying that. So I would end up going from there and developing my own formula-based strategy. And in the process of being able to communicate with my clients, I noticed that the same people would call me over and over every week or 2 weeks with the same questions. And I found myself hour after hour going over all the same things over and over. And I realized that this is extremely inefficient use of my time and theirs, because if they couldn't reach me, they would just continue calling. And it was not a really good way to communicate. So I started writing like a quarterly newsletter, and then that would morph into a weekly video where I would start talking about what's going on in the markets and show them charts and slides that was held on a private video server until, my partner said, hey, because he does compliance, said, you can go ahead and put that on YouTube. And that was cool. And so things started to grow from there.
Yeah, and it's taken off. You have a gajillion subscribers, and you're one of the favorite FinTwit favorites. What kind of stuff do you talk about on there?
Well, I talk a lot about macroeconomics and quantitative easing, things that are going on in the markets right now. What is going on, and how do investors actually look at it, understand it, and then potentially use it as a tool to invest to reduce their risk.
Steve, it's Patrick here. It's time to jump in then. Let's talk some macro if that's your cup of tea. Let's So why don't we start off with you just kind of giving us a high level view of how you describe yourself. What's your positioning in the markets? I know that I've seen that you're a bond bull, but what's your overarching macro theme?
My overall macro theme is we're going to have a complete replay of the great financial crisis, except it's going to be substantially worse. And as I built that thesis, I realized that if I wanted to put myself and my clients in the best position to get through it, that I needed to know everything I could know about monetary policy, everything I could know about quantitative easing, and then what happened and why it happened in 2008 and 9, so I could position accordingly.
Right. So let's just start from the top down. Like, then what's your take on the dollar and this trend that we've been in the U.S. dollar?
Well, I'm very dollar bullish, even though what we've seen since March, it's dropped. I think the dollar is headed substantially higher. Potentially, if I'm looking at DXY, I'm expecting it possibly to break over 103 and really be a massive wrecking ball to the economy.
Now, what's your rationale behind that? Is that the idea that the dollar shortage is the driver behind that?
That's part of it. There's definitely, in a debt-based monetary system, there's always a shortage of money, whether it's dollars or, as we kind of recently found out here in the U.S., we have mysteriously a coin shortage, which I try to tell people we've always had a coin shortage, but it's because of velocity of money is now moving so slow. It's just apparent we have a money shortage. I also look at the dollar and I see it has a relationship between treasury bond prices. Just to be clear, I'm not referring to yields, but to bonds. Right. And I say a relationship because I like to look at them as a couple who's dating. Sometimes they're together, sometimes they're apart, sometimes one comes back after the other. But right now there's a big gap. Bond prices are generally pushing higher, although not this week, and the dollar's been heading lower. The dollar will eventually catch up to bond prices, which I think are headed substantially higher when yields eventually break down and head to zero.
Right, and so you have this view here that the yields are going to continue to be pressured lower. Is that your view, that it's the central banks that are going to continue to repress the yield curve lower? What's the driver in your theme that interest rates will remain low? Well,
there's several views. One of them being quantitative easing is designed to push interest rates lower, which I know that's not the common or popular view of how quantitative easing works, but that is exactly what it's designed to do, is lower or suppress interest rates. So I expect at some point the Fed's going to have to do a substantial amount of quantitative easing, and we'll see a deflationary crash just like we did in 2008 when they were doing quantitative easing, and that will drive interest rates down. The other factor I look at is lending demand. Because in a debt-based economy, money is created not from the Fed, as again, many people believe that things like quantitative easing do. It's created when people borrow money. And right now, at current interest rates, we can look at real estate lending, and I haven't looked at today's numbers or this last week's numbers because we just got on the show. But looking at last week's data, you can see on a year-over-year basis, residential real estate is trending under 4% on a year-over-year basis, and on a rolling 90-day basis, which I like to track, it's almost at zero. It's just hovering right above zero. You look at commercial and industrial lending, it's on a rolling 90-day basis, it's negative. And then you look at credit cards, because that's a great pulse as a consumer. On a year-over-year basis, it's around negative 8% or something like that. What that tells you is, at current interest rates, there is not enough demand to create credit growth. Well, in the monetary system is self-regulating. So if you can't get enough money creation at a given level of rate, no matter how many hedge funds are shorting or investors are shorting the bond market, the monetary system will either push rates down or break asset prices lower. It will do something at some level to create lending growth. And so rates have to go down because, well, the Fed is trying to push them down and there's no lending growth.
All right. Well, listen, you prepared a bunch of charts, so let's start going through some of these to kind of get an idea of some of the stories that you're coming or conclusions you're coming to from this data. And so, why don't we start off here with your case freight index versus retail? What's your take from this?
Well, I'm becoming very untrustworthy of government data these days. I'm sure some of your listeners are generally don't believe a lot of it, but I look at the case freight index and it tells me that even if there is a massive rebound in retail sales, and assuming that is true, which is not evident in the weekly Red Book same store sales, what it's telling me is that wholesalers and retailers are just burning through their massive overhang of inventory and they're not out ordering a lot of new supply.
Right. Right. And so, and you were earlier talking about the idea of this commercial industrial lending growth. And so what's your take on this?
Right. So here we're looking at a chart on the year over year rate. What you can't see from the Fred databases, because you can't do a 90-day look back, is it's actually turned negative. And when you see commercial industrial lending negative on a 90-day basis, usually you're in a recession already. And there's appears to be nothing that's going to keep this from heading lower.
Right. So you just think that this was just a strong impulse that was here in the early part, and that it's going to now be mean reverting back down. But I mean, like that, at least on this chart, it's substantially above the zero line. You think we're like going fully on into the negative territory on this?
Right. Well, it makes sense why that big move higher happened is banks did not buy into what was going to happen with QE. I know Jeff Snyder's been excellent at kind of covering that issue. And so what you see is banks were pulling their revolvers or their short-term credit lines because they just knew, or corporations were, because they just didn't trust the system to help them out. And so what you see is this big spike in C&I lending, which normally in normal conditions would say, wow, look, all these companies are going to expand factories and build stores or do whatever they're going to do. In this case, they're pulling money to stay afloat. And that because they're short-term revolvers, they were out refinancing that debt in either the bond market or in the equity market. And now we're seeing here on a year-over-year basis a decline, but like I said, on a rolling 90-day basis, it's nicely negative.
Right. Right. And so when we're looking at the credit cards and other revolving plans, you can see a far different picture.
Right. It tells you the consumer is not spending money at all. I mean, we look at retail sales and say, okay, they're out spending, but they're clearly not charging. They're paying off their debt. They've been using their stimulus checks to reduce their debt. And in a debt-based economy, which is really interesting to me, that if you want the economy to expand, the debt has to expand. So a lot of people are saying, oh, there's going to be inflation. The economy is expanding. And I'm looking at lending growth. And it's contracting. And when it contracts, the economy and asset prices eventually will contract with it. Right.
Right. And now, and on your next chart here, you have this idea that the monetary base has been expanding, obviously, driven by the Fed. But what's your interpretation on this? You think it's turned?
Yes, in fact, you can barely see it, but it turned higher. And I've been saying to my listeners that the monetary base is going to head higher in the short term. We've seen the repo loans get paid back. We've seen currency swap lines get paid back, and it was only a matter of time before the Fed's QE kind of buffered that and started heading higher. Now everyone looks at this and says, well, this is great for stock prices, which I'm not one of those people that draw the stock market against this and say that the Fed has some magic wand to make stock prices go up every day. I look at this and say that when the monetary base is rising, it's a signal of disinflation or deflation. And now we're seeing it starting to head back up. And I don't know where it is in here, but when we get to the money multiplier, we'll talk about that.
That's right here. I mean,
is it the next one?
Let's talk. Yeah.
Oh, This is a money multiplier versus CPI. Can we go to 6 and we'll come back to 5? Is that okay?
Yeah, for sure. Yeah.
Okay, so this is a money multiplier, and this is an indicator of potential inflation. It doesn't mean you will get inflation. It just says it's possible. And you can take that or create this chart by taking the M2 money stock and dividing by the monetary base with a slight adjustment. And you can't see it here, but the money multiplier is rolling over. Now, I know what the technical definition is, but I'm going to give you the Steve definition of the money multiplier. I think if you guys ever skipped rocks across a lake? I imagine, well, in Canada, you have to. There's lakes everywhere, right?
Yeah.
I look at the money multiplier as it's how many times money exchanges hands before it dies. Well, how does it die in a debt-based economy? It goes to repay debt. And so the reason we've seen it move higher recently is because the M2 was rising faster than the monetary base. In fact, we just looked at the monetary base chart and saw that it was falling. So why does that mean there's a potential, again, keyword potential for inflation? Because the money supply has not been rising due to Fed's QE, as everyone seems to believe. It's been rising because people have been saving some of the money they've gotten from the government stimulus checks. And the notion is, well, that should be inflationary. And the answer is, well, it depends. It depends on how I use that savings. So if I use that savings to go, say, buy a new car or take a vacation, well, yeah, then it's inflationary. If I use it to start paying on my loan that comes out of deferment in the next month or two, then it's deflationary. So it gives you an indication there could be inflation, but the fact that it's rolling over is telling you that the money supply is headed lower, which somewhere in here there's a chart, and that the monetary base is headed higher. And when this heads down, it is a very clear indicator that we're going to see or deflation at the hands of the Fed. And we can go back to chart 5. And look at the CPI, which is great when you look at the increase in consumer prices, which everybody thinks consumer prices are going to go straight up due to the increase in the M2. Well, the better way to look at it is through the money multiplier. And as the money multiplier rolls over, well, guess what? So is consumer prices. And that is also disinflationary and soon to be deflationary.
So we had some surprises in the inflation numbers just recently. I mean, how does that fit into your narrative? Is that just short-term noise?
Yes, absolutely.
Okay. The simple answer, absolutely. Okay.
Yeah. I mean, well, you look at it and it makes sense because it comes back to the M2 and everyone is like, the M2 is inflationary. Well, it is. If people are saving money, it is inflationary. So you have to go back to March and say, why are people saving money? Well, one, they had people on unemployment. More than half of them had more money than they did working. So that helped. They saved money. Number two is there's over 100 million different loans in deferment. So not only did they have more money, but they didn't have to pay on their debt. But they knew they'd have to pay on their debt at some point, so they saved it. The only question is would the economy reopen and everyone go back to their jobs fast enough where that money could become inflationary? Or was everything going to get so bad that eventually that money is going to pay living expenses and debt as those loans come out of deferment where it's deflationary?
Right. And so now how do you think that this all plays into real estate? Because here you're showing the real estate loan growth versus the 30-year mortgage rates. What's the trend that you think is going to develop here?
I think 30-year mortgage rates are headed quite a bit lower. And what's interesting about this chart is you can look at periods where you see real estate interest or mortgage rates fall, and then there's a lagging effect. It leads to an increase in real estate loans. One of the challenges we have right now is you would look at the real estate market and say, well, wait a minute, there's tons of people out, buying homes. There's people refining. Why are we getting sub 4% growth on real estate loans on a year-over-year basis and virtually zero growth on a rolling 90-day basis? And this comes back to why low interest rates or zero interest rates are deflationary. Because when you make a principal payment on a loan, and if I have a 0% loan, then every payment is principal. Well, every time I make a payment, that money is removed from the monetary system. So what we have out there is a real estate market chock full of low interest rate loans. Well, as people are paying those back, it's destroying money, and there's not enough new loans being created at a fast enough rate to offset that, which is a big problem. So even though we have record low mortgage rates, we're seeing not enough activity in the housing market to create any growth here, which tells you that interest rates have to go lower.
Right. And now, obviously, if you're a big bond bull, you're anticipating yields to continue to press toward the zero boundary. But where do you think the 30-year mortgage rate could go down to on the lower boundary? You think you're going under 2?
Yeah. If the 30-year Treasury gets to zero, I'm guessing we'll see around 1.5% potentially on a 30-year mortgage, which will sound great.
Then you're gonna lock in your mortgage at that rate.
No, I paid my house off when I was 38.
Well, you can borrow for pretty much free at that moment, right?
Then maybe I could short the bond market, right? I told that to my wife, and bless her heart, she goes, "Steve, you've done a great job of providing for us. We're debt free." And she goes, and I don't care how risky you want to be with the investments, and you can do that. She goes, but do me one favor, don't pull the money out of the house and invest it. She goes, it just makes me feel good knowing that it's paid off. And I'm like, darn, that was part of my plan.
All right. Well, I didn't give you the advice. All right. So let's let's move on here because let's talk gold, because gold has had an extraordinary move, and you're showing a pretty common correlation of comparing gold to the real yields.
Right.
And so, what's your take here on gold and what's next?
I am short-term bearish on gold, long-term bullish on gold. And if we look back to 2008, which isn't shown here, there was a 30% pullback in gold from about 1,000 to 700 an ounce. And it occurred because real yields went up. And that was really bad news for gold. And a lot of people don't think that's going to happen again. And I'm holding to the fact that when the dollar does rally, and I'm pretty sure we have a chart on that in here somewhere, it's going to take the consumer price index negative, and that's going to drive real yields and bond prices up and be bearish in the short term for gold. Now, after that, I'm heavily bullish on gold, but in the short term, I'm bearish.
So in the way that you manage your investment portfolios for your clients, does that dramatically impact your short-term allocation to the precious metal, or do you just ride them out in that allocation?
I'm currently not holding an allocation to it, because what I find really interesting about the bond market right now is effectively you're being paid to sit at even a relatively low interest rates, which a lot of people shake their head. Is like, how can you be bond bullish? Well, I'm not buying bonds for the interest rate. I'm buying bonds for the price appreciation, like people would buy stock. And if you're long duration in bonds, you could feasibly still see a potential 30% upside if yields get near zero or get to zero on the 30-year. Well, if gold pulls back, let's just pretend it pulls back 30% like it did, and maybe it's more, maybe it's less. I can still come back in, and it's still relatively attractive price point, maybe around $1,400 an ounce, but with 30% more money.
Right.
And that's what I think people don't appreciate about the bond market. They look at the interest rate and don't realize you can actually buy bonds if interest rates go down for price appreciation.
Right. And so how do you size that up then when you're looking at this U.S. dollar versus the CPI? What's the trend that you're trying to identify here?
Yeah, I think the dollar is going to smash through the roof, because when interest rates do go down and hit zero or near zero, bond prices are going to skyrocket. And that relationship we talked about earlier between the bond market and the dollar is going to drive the dollar higher. Plus, contrary to popular belief, quantitative easing does not cause the dollar to weaken. It causes the dollar to strengthen. So I anticipate, again, the Fed doing, who knows how many more trillions of dollars in QE, and maybe in a very concentrated time. That is what will drive bond prices higher, drive the dollar higher. And in this chart, we can go back to 2008, and you can see the dollar just shooting up and the consumer price index just slamming down negative. Well, there's your case for real yields going going up. And then after that, you'll notice that the consumer price index moved higher over the next couple of years. There's your 2-year rally in gold. So, the bond market to me is giving me the opportunity to kind of, sleep at night and not worry about the markets, knowing that real yields are headed higher, and as is the dollar, which should play out pretty nicely, just as it did in the great financial crisis.
Right. Right. And so just when we're looking at the U.S. dollar versus real yields, how do you think the impact plays out here?
Right. Well, it's just kind of the same chart, except showing now that if the dollar rises, that brings real yields up, and there's your bearish short-term case for gold.
Right. And so when we're looking here at the velocity of M2 and the labor force participation rate, do you think that that's bottomed here?
No. I think I wouldn't be surprised if we see a pop in the velocity of money. A lot of people are thinking it's going to just shoot higher. It's not. I mean, it's absolutely not going to go higher. And one of the factors, and I wish I was the first person that came up with this chart, but I will have to credit Raoul Powell of Real Vision, where I originally saw it. But what it tells me when I look at this is everybody thinks their job's coming back at some point. And what this tells me is, no, they're not. And that is not bullish for inflation at all. People want to, think about inflation coming. Well, you need people to go back to work and consume. And this chart is telling you that no, the labor market is not going to recover from this because the velocity of money is too low and will be headed lower, in my opinion.
Right. Right. And then the last one here, you're trying to compare that velocity to the total amount of government debt.
Right. Velocity of money is very complex. And one of the things that I think I do pretty good on my show is simplify things where most people can understand them. And when I first charted this, my jaw hits the floor because it makes perfect sense to me. Is why is money slowing down? And one thing that I do, Patrick, when I'm struggling with how to kind of figure things out, I treat myself like a little kid. I ask myself why, and I follow myself around. Why is this? Why is that? Why?
Right.
Why is money moving so slow? And then over the course of a few days or something occurs to me. And in this case, when I looked at the amount of debt, which is shown here on this chart inverted, it was very apparent that the government is squeezing out private industry by borrowing just an excessive amount of money. And there's this notion that, government debt is inflationary. That's not true at all. Government debt is highly deflationary. And all the COVID thing has done is cause the government to borrow more and more and more money. And all it's going to do is not only destroy more jobs, it's going to continue to be deflationary or disinflationary, depending on how strong it is.
So just to kind of on a higher level, put it all together, you're at this moment positioned bullish the U.S. dollar. You're positioned bullish bonds. You generally are, I would imagine, underweight equity and gold and other assets associated with inflation. So you're looking for, let's say, another wave of this to play out. Maybe it lasts a half a year. What's the narrative that you have where this flips, where this plays out? When do you change your storyline, and how do you change your asset mix? Like, what's your thought process as to how your investment thesis is going to start to evolve in the coming year?
Yeah, I think it plays out much sooner than later. My big focus is watching the 30-year yield, which right now everyone thinks is going to head to the moon again. But I'm watching 1.2% on the 30-year, and I'm also watching the dollar, which is making some nice support at, I just had that chart up around 93, between 92.5, 93. But I'm watching yields. Once yields 30-year start breaking below 1.2, then all bets are off that I'm right, because when you see a move in yields, they move very, very quickly. And a lot of people don't realize, if you go back and look at how bond prices moved going into the great financial crisis, you could have made 30% return in plain old boring government bonds in a month and a half. Because what happens when they break support, as I know both of you guys know, is you get all of these speculators and other participants who are short the market or short the bond market now have to cover and come running the other direction. And all that does is just put a huge wave of momentum behind the trade.
Right. Steve, it's Kev here. I'm going to jump in. That's a fascinating story. It was, you really are a terrific storyteller in terms of sketching out your macro view. I have a couple of questions that, towards the end of the interview, we always kind of want to take it back to the personal level. First of all, I had to Google Bakersfield because I didn't know where it was.
It's okay. You're not the first person.
What is Bakersfield like? And for those who don't realize, I guess, what is it? Is it a couple hours northeast of LA?
It's about 90 minutes straight north of LA. It's a heavy farming, and I'm going to say almost used to be oil. It's a big oil area, but California hates big oil. So I don't know how that's going to long-term play out, especially with oil prices where they're at. But it's mostly an agricultural and oil community where it gets really hot. I think this week we're pushing, 108, 109, and maybe even a little higher than that. So we're known for the worst air quality in the world or in the country. So, but it's very dry, very hot, and that's Bakersfield.
I'm from
Winnipeg. The joke used to be that if you're driving north out of LA, the reason you got stuck and living in Bakersfield is your car broke down.
I'm from Winnipeg, and they always joke about the winters being a dry cold. You could joke about the Bakersfield. At least it's a dry heat.
Yes, we don't have a lot of humidity here.
That's hilarious. So you have the tumbleweed. I can just picture it already. Charlie Brown with the tumbleweed going by.
It is. With oil, just now add oil derricks into that picture, and you've pretty much got it.
One last thing that I just always like to ask our guests is, if you went back and could meet the Steve of 20, 25 years ago, what advice might you give him?
Don't quit. Because somehow all this stuff will play. Just keep studying, keep learning. Don't, when I was a kid, my dad, he told me, son, he goes, I don't care what you do for a living. I don't care if you become a trash man. He said, I want you to be the best at whatever it is you can be. Now, which was really key is he didn't say, I want you to be the best, because that's hard to do. He said, just be the best to your abilities. Whatever you can do, just be the best. And when I decided to, manage money and develop, my investment strategies and study macro, it was great, because I think we can all agree that you can't be the best in this business, and there's no limit to how much you can learn. And so it's fun, because every day I try to be better for my clients, better to my YouTube viewers and all that. And it drives me to learn more, and from some of the best in the business that hopefully someday I'll get to meet. But that's really what drives me is, my dad said, just be the best you can be.
Well, that's some great advice. Now, Steve, before we let you go, why don't you tell listeners where they can find more about you and your videos and anything else that they might want to get in touch with you?
Yeah, they can definitely find me on YouTube, Twitter now, courtesy of Brent Johnson. Compliance didn't allow me to be on Twitter until Brent broke the story that I was going on Real Vision. And then within a week, I think I had 2,800 followers. My YouTube channel skyrocketed. So you can find me anywhere. Facebook, on my website is stevenvanmetre.com. I'm all over the place. I'm definitely there. And as you mentioned earlier, I am an investment advisor. I run a macro strategy and a fully formulaic investment strategy I created called Portfolio Shield.
Terrific. Well, thank you. Nice. It's been a pleasure meeting you. We really appreciate your time.
Great. Well, thanks for having me on the show, guys.
Thanks, Steve.
Okay, Lena.
Hello.
Hello. How are you?
I'm good.
Did you enjoy your week off?
I guess it was a bit of a week off, but yes, I did. And I'm glad to be drinking beer again.
It was just a week off from the Huddle.
Yeah.
Other things continued.
That's
we
right.
won't name names.
There's a shitstorm somewhere, every time, everywhere.
Yeah.
That's right.
Okay, let's talk about our beer.
Yeah, what's the beer? Who's the beer sponsor?
Our beer today is Peter Pale and Mary Folk Pale Ale by Meekiller Brewing Company. So Peter Pale and Mary, a now classic pale ale featuring a unique blend of fresh, slightly grassy and fruity hops balanced with a dry, medium-bodied malt base. Refreshing, flavorful, hoppy, yet remarkably easy drinking.
Yeah, that's actually a good description.
I'm a fan. I was worried when I heard grass. Well, not that kind of grass. And it's tasty. I don't taste any lawn clippings or anything. It's pretty good.
It is surprisingly refreshing.
Actually, it's better than pretty good. I'm a big fan. Now, I won't give it away, but I might be erring on the higher side with this beer.
Okay, well, if anyone who wants to listen to us rate the beer, we do that at the end of the show. So okay. Let's get on to our next interview.
Are we not doing the disclaimer?
Okay.
No, let's just skip it, and you can leave all this in here, Lena. Okay, I will do a disclaimer. Let's just see what we were supposed to say here. I've completely forgotten.
That's what happens when we take a week
It's not
off.
in here. It's not in here. Don't listen to us.
We have nothing.
Oh, here it is. Okay, already. You know what? I'll do it. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. Joining us now is Julia Cordova from Cordova Trades, the internet sensation and just an all-around fun person. Julia, welcome to the show.
Hello. Thank you for having me. I really appreciate it.
You know, a lot of people wanted you to come and appear on our show, so we're excited to have you. And when I was going through your Twitter feed, I thought to myself, this is our kind of person, because I saw a comment that you said something like, I could spend my time video editing or I could start day drinking. And I think I made the right choice.
Yeah, I made the right decision. That's why my YouTubes are all very, they're raw, you know, there's no editing. 'Cause, I mean, if you can spend your time doing things that are more productive, why wouldn't you?
For sure. You know what? When we first started this show, we didn't have Lena, and it was just Patrick and I. And one time Patrick wasn't available, and he left it with me, and he basically told me to edit it. And so my solution to that was not to edit it and do it in one take.
That's what I do. I'm a one-take wonder. Yeah.
There you go. So that sounds like my kind of plan. The other thing that I was looking through your Twitter feed, and I noticed that you had the Fargo GIF when you were talking about an hourly ES gap. And I love the Fargo. I think it's an unappreciated movie.
I do too. It's a great movie. And anytime you can use a wood chipper when you're talking about, you know, what stuff, I think it's great.
That's right. Okay, so I'm going to actually bow out of here a little bit because you guys, both you and Patrick, are technical gurus, and I'm going to let you guys go ahead and talk about what you're seeing in the markets, and take it away, guys.
For sure. And so, Julia, let's what we're going to do is we're going to talk some markets. But before we do, I wanted to just kind of introduce everyone online to sort of your approach. So how do you generally, for our listeners, the way we would summarize your approach to trading? I mean, you're obviously more of a day trader. How would you kind of sum it up?
Well, I am both a day trader and a swing trader. But, you know, I think most of my Twitter, I don't know, audience knows me for sort of being a bottom catcher or a top caller, and that it sounds horrible. You never want to advertise that. You're like, don't ever try to do that. Trade with the trend. But I'm pretty good at finding support and resistance, and really that is all it is. And so my approach in general, though, is to scale into trades that are, if they're against the trend, and both in day trading and swing trading.
Right. And so when you're trading, how would you summarize like your approaches to risk management or money management? You just put in the trailing stop losses. Like, how do you approach managing your trades?
Well, so that's a good question. So if I'm trading against the trend, I will put in a third of a position, and then I'll give it quite a bit of leeway. Sometimes I don't need it. Sometimes I'm pretty good with levels, but I'll just put in a third, and then I'll have a pretty wide stop loss. So I'll be able to add, either if it goes against me, I can add and sort of try to average down and then put in my stop. Or if it goes forward the way that I want it to, I can add on a sort of a break of resistance or support or whatever. So I generally just scale in that way in thirds.
Well, that's awesome. And, you know, the one interesting part is that you've become successful at doing what so many people aspire to, which is just, coming into the markets, learning a systematic way of approaching the markets and just doing it for a living. And so it's great to hear your success story. So why don't we talk some charts? And actually see what's going on. And what I like about your style is you stick with a lot of the futures, and which I like too. So I figured we would do our talking charts segment between me and you, and we kind of scan through and see what's going on here in the markets. Now, typically, while we often have different indicators on there, I just like to just put a nice clean candlestick chart on there. But what's your take on these equity markets? I mean, we've more or less seen this S&P 500 just crawling higher, and I know that it's the NASDAQ that's really been the one that's been roaring. But it's at an interesting level. Like, how much significance do you put to the fact that we're approaching those February highs up along here?
Well, you know, I thought we would do exactly what we're doing now, but I thought we would go a little more down first. The fact that we're almost to all-time highs to me, and at this point, I think is begging for some sort of correction, especially because it just sped right through that gap. It didn't even, I mean, you know how gaps usually leave some resistance if they're higher. You'd expect it to sort of, I don't know if we're going to get that gap, and it just kind of barreled through. So I don't think that was bullish at all. And I personally believe I don't know if, we might zoom to all-time highs for sure. It's a possibility, but what I'm looking for here is some sort of correction before we decide whether or not we're going to go to all-time highs or not. I'm undecided on that.
Now, how much weight do you put on what's going on in that NASDAQ? Because like when we look at the NASDAQ here, it's not only broken those highs a long time ago. I mean, we broke those highs back in June, those February highs, and it's been a pretty systematic sequence of higher highs and higher lows, all retracement levels, holding above moving averages. It's just in a systematic trend, and you know as much as I do that when something sustains this long, it's overdue for a correction. But we haven't seen a turn in the price action. What are your spidey senses telling you here? I mean, can this still make one more leg higher and punch to 11.6, 11.7 on the upside, or are we stalling out here?
It's absolutely possible that it does that. But I am now, right now, at this moment, I am short the NASDAQ. I went short at 11,250. You see the green candle there?
You want to put a 1 hour chart here?
I actually, okay, I couldn't show you on a 1 hour. Could I? Go back to the daily though.
Yeah, sure.
Okay, so you see the three red candles in the row? Yeah, those. Okay, so I went short at the top of the green candle. That's right before the red candle. So I did well in that short. And I took some profit, and then I still hold some of it though, because I can, and because I feel that if you look at the monthlies of both the S&P and the NASDAQ, to me they look pretty. I mean, they look bullish, but I believe that they are bearish. I know that sounds strange, but.
So here's the. I mean, well, first of all, it's just the velocity from which this has been running. I mean, that's just such an extraordinary move on the monthly charts, and it's certainly overdue for a pause. But I do have to ask you, like on your YouTube channel, you call it your nuclear NQ trade. What's with the nuclear name to it?
Because I had a small short. It was 1/3 of one position from, I don't even remember, I don't know, maybe 10.9 or so. I can't remember, but I had a 1/3 position on it. I was just like, whatever, it'll be fine. And because I wasn't too concerned about it. I had a trend line higher up where I was going to add my other 2/3. Right. And as I was watching price action, when it hit that trend line, it just went above. It was like butter. And I really thought that pink line should have held. So when it got to sort of what I thought was a good stopping place, which was 11,250, I was like, not only am I going to add the other 2/3, but I'm going to add
all in.
Pretty much a lot. And I sold my silver, I sold my natty. Not all of it, but I sold 2/3 of my silver, 2/3 of my natty, 2/3 of my coffee to go all in, or mostly in, because I thought the odds of those 3 red candles happening were pretty freaking high, because to me it was a false breakout, and false breakouts are bearish. And so, I mean, I'm disappointed that it didn't have continuance there, but on the other hand, it's right now at least made a lower high. So I'm not afraid at all of shorting the market, because I've already now locked in profit, and I think it would be the most unexpected thing to happen, right? Is to get some sort of correction here. I mean, look, it's beautiful in a way, but it's also it's sick. It looks sick.
Julia, it's Kevin. I hate to interrupt, but I saw you talking, or heard you talking about the false breakout in the stock indexes, and I wanted to tell you about a new technical formation that maybe you're not aware of that is known as the prairie dog.
Yeah. Prairie dog.
Because it pokes its head up and then comes in. It is a technical formation that is only known to market huddlers, but it is a noble animal, and it is a very, very important technical formation, and you should be on the lookout for them. And we're just doing our little bit to try to get other people talking about the prairie dog formation. So I thought I would interrupt here and just kind of make sure that I do my little bit.
Thank you, Kevin. I will talk about the prairie dog formation the next chance that I get. But you have to say the word McSqueezy, okay?
McSqueezy.
McSqueezy, because that is my own very technical term for a level that above which something is going to McSqueeze, or it's like an easy squeeze. It's a very easy trade. I just say above this level, it'll McSqueeze to whatever.
I love it. That's awesome. It's going into the lexicon. Don't worry.
All right.
Okay. Thank you very much. I'll let you guys continue. Sorry to interrupt.
Yeah, you're interrupting, Kev. Really. And anyway, so what's just to before we move on from equities, though, obviously the Nasdaq outperformed the S&P, and now you're more of a swing trader, and so when we're talking a correction, like there are some bigger macro traders that are like looking for another repeat of February, March, and some monster downtrend, or are you just looking for it to just give back a part of this rally, and then we're talking 300-400 points, or are you looking for something much more ominous in this kind of a drop?
Okay, I got to tell you. So I actually did really well. On 3/23, I tweeted that I was going to buy this because it looked like it would bounce. Okay, and that was the absolute bottom of the market. Nice. I get lucky. What can I say? I'm a bottom catcher. But people were asking me then, and then even actually at that, it looks like a bull flag there, right in April, right at the beginning of April. I even taunted the people that thought it was a dead cat bounce by putting a meow line on my chart, because I'm like, once we're above the meow line, kitty cat is going to scratch your eyes out and go really high. But the truth be, and then I was even talking with another trader, and I said, he's like, I can't see a V formation. I'm like, neither can I, and that's exactly why I think that actually might happen. And so, but my point in saying that isn't to like, oh, how great I am. It's really that I didn't know. I mean, I did go all in on 3/23. I did actually. In all of my accounts, I brought back everything I had sold in my investing account. I went all in, but I did not know that how long the bounce would last. Like, I had no idea. I just really have to go level by level, and I don't know how other people would. I don't know how. I'm not a fortune teller. All I can do is say, okay, here's what I think will happen here. And then we have to wait until it gets to the next level and figure out whether or not we're going to bounce or whether or not we're going to keep going down. I mean, I would like to be able to have a longer term outlook and be, Miss Cleo, but I can't. So all I'm looking for here is a correction, but I do think it's very overextended. I do think it would surprise the most people if it continued to go down. And I am one that's in the camp of the market, screwing the most people, so to speak.
I love that.
Patrick, that was the best answer I think I've ever heard. Honest to God. You know me, I'm not a technical guy, but I thought that was awesome.
Thank you. Yeah. And you're how many beers in now? Because
he's got that lensy fog that covers his eyes from a few pints. Anyway, but let's talk Natty, because I'll let you and Kev talk about this, because Kev's been toying with nat gas a number of times, and
it's a cruel mistress. And you know what? I have to give you credit, Julia. Very few people were talking bullish nat gas, and I saw you. I watched you. I follow you on Twitter, and I watched it, and I was like, who is this lady that's talking bullish on nat gas? I love her. And you nailed it, and it's well done, really well done.
Well, it's not, thank you, but it's not like I hadn't attempted it a few times before. I just finally figured out the correlation between nat gas and this lizard that comes into my house. And once I had done that, I felt like, all right, I got this. Every time I see Nathan, the lizard, it just goes higher. So I go around looking for him now.
So have you seen him lately? I need to know.
So yeah, I saw him last night.
Oh God,
yeah.
well,
That's
that's obviously
that breakout
why
candle,
that's
right?
why we have the big breakout candle.
I'm just saying, I saw him last night, and I almost brought in some bugs for him, but I thought, well, what if he doesn't eat the bugs, and then they just crawl around my house, so I didn't want that. But I thought about it. I did think about it.
So what's your thinking here? Do we see Natty get up to the 245, 250 level on this September contract?
Well, I don't know the order in which things will happen, but I think it can go all the way to 6.
Okay.
From your lips to God's ears.
I just blow your mind.
No, I completely agree. I think that it could surprise everyone.
I mean,
it's so cheap. It's so cheap.
It's so cheap, but you know what? Cheap is not always good, right?
No, I get it. You could have said the same thing about wheat and corn and all that.
That's a pretty big macro call for someone who's swing trading. That's a bold.
I like it though.
I like
bold.
it. I like it. Now you're on record here. So when it happens, you can circle back and say you were on the market huddle calling it. That's awesome.
No. Right before coronavirus, I was on another program calling the fact that coronavirus was bearish. I was like, so this could happen again. It could happen again.
There you go.
It could see the spike there in May, the top spike that went up about 250 or so. I mean, it could definitely see some resistance there. Maybe even come back down and chase out a lot of people. But no, I'm very longer term bullish commodities and bearish equities longer term for sure, 100%.
Right. Mm-hmm. Right. And so now, what a move we saw in gold and silver. Which one you want to start with? Gold? Let's start with gold. But we saw this great move and to the upside, and then we obviously get such a rapid and very strong immediate 50% retracement of that last move, and it came pretty fast. You think that this is a buy on dip, or it certainly could offer a swing trade to the upside, but do you think that there's room for gold to make another full leg higher?
I do, except for I think personally the velocity of a correction like that, sure, it can get bought up, but almost always, typically, when the velocity is that fast, it's going to probably suffer another leg down or some other sort of correction before it goes back up. That's just my personal feel. But you can
like a zigzag down, like it's like you think we can hit down to like 1850 or something like that? Is that what you're thinking?
Yeah, sure. And you can see the 3 red candles there. That's what I'd call my 3-day rule. Like if something, like that first red candle, and then it's kind of got a little doji, and then the big red candle. Yeah. I almost, I generally will buy on the 3rd day of a 3-leg down like that and just see what happens, at least for like a short-term trade. But, we'll have to see. I am bullish. Of course, I'm bullish gold like everybody else in the universe. But
it's a crowded trade. It makes Kevin nervous, that's for sure.
Well, yeah, and right. But I'm also, I'm just thinking that it could potentially go a little bit further down than it has already, just to scare more people out. Because doesn't it look like a beautiful buy right now? Like just looking at that, when you be like, oh yeah, look at that. It had a doji at the bottom, and then it just started to go up. I just think now it's probably going to go a little more down and scare people before it goes right back up.
Yeah, just a whole bunch of people having their stop losses sitting below that previous low. Just one quick little visit down there just to shake out the weak hands before it turns up. It's entirely possible for sure. But generally, you're favoring still the idea that there'll be a buy on dip. It's just not necessarily straight up from here, right? Is that a good way of kind of summing it up?
Yeah. But I would absolutely, if I weren't, if I were interested in it, I would put in one scale here and then just wait. I would wait until it got to be, until it got lower or until it got higher. Either one.
Yeah. And so when we're looking at the charts here on silver, like silver's been like sideways for years. And then suddenly in July, it just broke out and just didn't look back. And like the velocity of that rise was extraordinary. But the correction was literally over in one day. At least the first wave of it. I mean, what's your take? Is that enough of a reversal, or is this just going to play suit with your gold narrative?
Well, actually, what I'm looking at right now when I see that is that looks like a diamond pattern on at the top there.
Right.
So I would expect some more consolidation here, and then a diamond is either a continuation pattern or a topping pattern,
Right.
and and then what? Lately, the algos have been doing the diamonds. I don't know. Sometimes algos I notice favor certain formations for a little while, and then they go back to something else. Like a few years ago, it was Head and Shoulders everywhere, and then it became megaphones everywhere, and now it's diamonds everywhere. So I would draw on a diamond there, and then I would expect the first move out of the diamond to be a fake move. So maybe the first move would be a down move out of the diamond, and then potentially up and away. I'm a big fan of silver. My three musketeers in my investing account are natural gas, silver, and coffee.
Nice. Well, okay. Well, we got to talk coffee then.
Yeah.
That's. I'm going to pull up just the continuous contract over here. 1 second here. There we go. And so, I mean, that's a pretty big base of support down there. Along that 95. So, I mean, I could see that similar style breakout is what we saw in Natty there on there. But you think that this is the buy on dip?
I think so. I think so. I was lucky enough to bottom catch that a few weeks ago, or close anyway. And I think for sure that coffee is going to go to the moon.
The American breakfaster is going to be incredibly upset when their coffee prices are going to be rising, right?
I think the coffee is. I hate to say this because I don't drink it, so I don't really care. But I think the coffee is going to be a drink for the rich people in the future. I think coffee is going to get very expensive. I hate to say that, but I think it's true.
Okay. Well, how about we just talk about the upside target? You're looking for it to come right back to that 2019 high up around that 142 on the interim? Like, is that where you think this could swing back to the upside from?
I do. I think it can go way past that, actually.
Right. But and so would you think that just like the silver chart that this can still dip down to 110 or something on a retrace, or is this just up from here?
It could dip down, but
you just buy more, right?
Yeah. I did my Joe chart that I highlighted in my YouTube video last week. It hit exactly the bottom of that channel this week, and I had a buy order to buy it back. And because I'd already taken profit on my NASDAQ short, I bought some back at that level, but. I'm a big fan of coffee, so yes, I will continue buying more if it goes lower. I really will. Same thing with silver and Natty. I'll keep on keeping on. I mean, it's important for people to have some dry powder to do with, but I'm very, very bullish commodities.
So let's leave it with one more chart. What's the one chart I didn't bring up that you want to talk about that you have a higher conviction on? The dollar or bonds? What's your thinking here something you want to talk about?
You know what? Why don't we do something you want to talk about that I don't care about, and then maybe like you could tell me what you think, and then I'll tell you how wrong or right you are.
Well,
Patrick, I love Julia. This is awesome. She's putting you on the spot. You tried to put her on the spot, and she turned the table on you.
She flips it. I mean, that's perfectly fine.
Give her your favorite trade here, Patrick. And
not
do
favorite.
I'm going
to
jump in and shit all over it too.
Well, no. But listen, this trade right here. Kevin and I are going to be in Miami shortly, buying with me paying the bill for steak dinners for Cuppy and Kev, because I lost this trade or this bet spectacularly, this is the euro.
I'm not going to answer this question unless I can also go to this dinner.
Oh, there. All right. Well, we'll keep you on the loop, but. we'll have to make a bet, and therefore, when I lose the bet spectacularly, I'll be paying for your dinner as well in Miami. How's that sound? I was quite bullish the U.S. dollar, bearish this euro, and I was clearly spectacularly wrong. And Kevin doesn't want to let me forget, but this move now to the upside of the euro is getting a little bit heavy, a little bit toppy, and there's a lot of people out there that in the eye of the beholder, someone wants to see this as a bit of a topping formation, and other people are saying that this is just the euro pausing before a continuation pattern for this thing going another full leg higher, maybe to 122, 124. So in your light, like for me,
no, Patrick. Don't ask Julia. She told you got to tell us your view.
Yeah, I'm literally just giving my view, Kevin.
Okay, go ahead. I didn't.
Can I give my?
I didn't mean to interrupt.
Right. So for me. Every bone in my body wants to be bullish the U.S. dollar, and so I want to see this chart break down. So one part of me technically wants to cookie cutter some head and shoulders pattern or some crazy pattern up here that's a topping formation, but for me this is such a key moment to find out whether or not, like in my mind, if this thing does not reverse here in the next couple days with some sort of red reversal candle heading down to 117, this may be just the midpoint of another full move up to 122, 123. No matter how much I don't want that to happen, but it's a really important crossroad for me here. I don't want to be bullish it, but it definitely is setting up for that. What's your take?
You didn't do it. You didn't say what you thought. You
okay? No, fine. I think it's going to fail. I'm going to stick my neck. I think it's going to fail.
Julia came out. She said she loves nat gas. She loves coffee. They're going higher. You come out and you say if it goes higher, you know what? It could.
Oh, okay, fine. All right. Okay. I just said it. All right. It's going down.
Okay, there we go. Julia, what do you think about his call? His bold, assertive call that he's so.
So this is interesting, right? Because we're not looking at any indicators. I'm only looking at price action right now.
Yeah. Okay.
And this is the daily. It looks to me like it's going to go down and have a false breakdown and then go up.
Okay.
Yeah.
Well, I like it.
So it's going to draw me in, get me short.
That's true.
And then it's going to pull the rug out from underneath my feet and just.
Can I ask why you feel that it's going to break down? Like what are the kind of signal?
Because look how beautiful it is. Like to me it looks like a flag. I know that you think it looks exhausted or whatever, but to me that looks like a flag. Yeah. I would draw a flag in there or a pennant. Yeah. And so
that's definitely where it would be. If I was wrong, that's what's going to be, right? It's going to like whether or not some traders will see that. Like
is that a flag or is that a pennant? I don't know.
Well, whatever. I'm just it's a consult. Well, I mean, it's in the eye of the beholder. Every technician has a little bit of a different way of approaching it, right?
Yeah, Lord knows what I put on my charts. I have all sorts. I have like ambulances and all sorts of things. So like flag versus pennant, I don't know, but it looks like it's consolidating, right, for something. Yeah. And because it looks so bullish, then I guess I would say that if the next move is up, then it will go back down afterwards. But if the next move is down, it will go up afterwards. And it looks to me like the next move would be, it looks like it'll go a little bit higher to 119 or so, and then have a big red candle, and then some red candles, and then go up.
I love it. You basically see the market trying to screw all the technicians all the time.
Is that what I'm doing?
Well,
I don't know.
That's your base case,
and I love it because I feel like that is often what happens. Like what is so obvious never works, but then it kind of it'll fake everyone out and then go back down and then fake everyone out again and end up actually working in the way that it was supposed to work in the first place.
Yeah, and if it were me though, I would put some RSI in there, trend lines and RSI as well, so that I could just validate things when they happen. I like to look for both price and RSI supports and resistances.
Nice. So Julia, okay, so we gotta, before you leave, I saw a video and you introduced everyone to your dogs.
Uh-huh.
How are the dogs doing?
They're well. They're in the office right now, and you don't hear any heavy breathing, right? And it's not me if it is, but no, they're just sleeping right now. There was a storm earlier, so they're both, I think, just mentally exhausted from that, and they're doing well. Thanks for asking.
So my wife listens to this podcast, My Favorite Murder, and it's actually a very, very popular podcast. And one of the things that they asked is if you could talk to your dog for 30 minutes,
Yeah.
what would you ask it? And I thought that was a great question. Which dog would you talk to, and what would you ask it? So I'm gonna give that question to you.
Okay. Well, I already talked to them. So.
No, but if they could talk back.
Oh yeah, no, I don't want that.
Oh, you refuse to answer the question.
No. If they could talk back, I would just want to make sure that they knew that they were loved.
Oh.
And so really I would just say, do you know that you're loved? And what else could I do to show you that you're loved? And they'd probably just like, make me a sandwich, lady. Both of them would say that. But yeah,
Steak dinner.
Okay.
that's what I would do.
You're too nice a person. Okay, so we're for people who want to get more of this terrific content and learn more about your technical analysis, where can they find you, Julia?
Anybody listening to this can find me either on Twitter at Cordova Trades or on my YouTube channel, and that is called Julia Cordova.
Well, that's great. I knew I was going to have fun, and it ended up being even more fun than I thought I was going to have.
Because at my expense.
It was good. I must admit, I never missed the opportunity to make fun of Patrick. But listen, I am going to be tweeting you all the time for Nathan the Lizard sighting updates.
Okay, sounds good.
It was a pleasure having you. It was nice meeting you. Thank you for taking the time.
Thanks,
Thank
Julia.
you. It was an honor.
Take care.
All right. Cheers.
Patrick, time for This Week in Trading History. What do you got for us?
Well, this week, now we in the past have already touched on LTCM, and but we never really went too much into the story of John Merriweather. And so it was on August 10th in 1947 was his birthday. And so I figured we'd spend a little bit of time talking about this legend and hit a little bit of his backstory and everything up to and after LTCM. So he went and got his MBA at the University of Chicago Booth School of Business. And his one of his first jobs after graduating, when he moved to New York, was working as a bond trader at Salomon Brothers, right? And so at Salomon Brothers, he became the head of the domestic fixed income arbitrage group, and in the early 1980s became the vice chairman of the company. In 1988, he became that. But it was in 1991 when they were caught in that Treasury securities trading scandal that many people have written about involving Paul Moser, right?
Right. But now, Patrick, a lot of people I guess what they attribute this to being John Merriweather was ultimately in charge of Moser. But the thing was, Merriweather was on the proprietary desk and Moser was on the client desk. And the reality is, when you go and dig into it, that Merriweather just kind of was in the wrong place at the wrong time and really had very little to do with the scandal.
He might have fined.
He might have done his share of blowing up the financial system, but I don't think we should blame him for rigging the auctions.
Yeah, I mean, he was in the opening chapter of Liar's Poker, right?
Right. So that is the quintessential awesome story about in 1986. It was at Salomon Brothers when John Goodfriend, which was actually the CEO or the head of Salomon Brothers, came over and he wanted to get to be part of the boys on the proprietary trading desk. So he came over and they saw they were playing this game called Liar's Poker. And do you know how the game's played, Patrick?
Well, why don't you go ahead and...
I take it that's a no. So the way
we've talked about it in the past. But.
It's in essence, everyone takes a different bill, and then what you do is like a dollar bill, and what you try to do is collectively decide how many of a particular number is in everybody's hands together. So if you think about it, all you know is your kind of sequence of numbers, and then what everyone else is bid. So it ends up being that there's some bluffing and double bluffing and math and all these things. So it ended up being a game that the bond traders loved. Well, in this book, Liar's Poker, written by Michael Lewis, he talks about the fact that John Goodfriend, the CEO, decided he wanted to be one of the boys. So he came down and he wanted to play with them. And so he decided he was going to kind of strut his stuff, and he said something to the effect of like, I want to play, how about we play for $1 million? And back then, $1 million was a lot of money.
Actually meant something, yeah.
Yeah. And John Goodfriend, was basically trying to show that he was the big, swinging dick, and that he was the one that was going to make it so no one wanted to play. And at which point, John Merriweather supposedly turned around and said, if we're going to play for money, let's play for real money. $10 million, no tears. Meaning that, if you lost, you weren't allowed to bitch or complain. You had to lose it. And the legend has it that basically Goodfriend, even though he was very wealthy, kind of got outbluffed because he didn't want to lose $10 million. And he walked away and he thought to himself, geez, that Merriweather is crazy. At which point Merriweather thought to himself, no, just really, really good. I thought that's a great story. It's a great story. Who knows if it's true? There's lots of people who claim it wasn't true.
Yeah.
But it just kind of goes to show you the attitude on the desk.
Oh, for sure. And but so then after. So let's go on with the story, but that's a great addition to that. But after leaving Solomon Brothers, he obviously partners up and creates long-term capital management, that hedge fund that is now will live in infamy.
That's right.
And when it collapsed in 1998. And it's a great book on it, the book of When Genius Failed. It was the first time, I guess I don't know enough of my history to say first time, but it was the Fed had to come in and actually prevent the system from failing. They had to bail it all out, and many argue that was the moral hazard that really started the next several decades of the craziness we see in the markets today. What's your take on that?
No doubt that was the first time that a hedge fund had taken the financial system hostage, meaning that a single entity could potentially bring down the whole financial system. Whether that was the start of the moral hazard, I don't know. I might take a little bit of a different tact and say that it really started with Greenspan's irrational exuberance speech, but there's no doubt that it was solidified with the long-term capital. Now, you said that the Fed had to come in and do something. The reality is that the Fed didn't. The Fed took all the big brokers together, put them in a room, and said, you guys figure this out, because if you don't figure it out, the system's going to implode. So the reality is they didn't do much except for lower rates. But it was the first time. Now, one of my favorite stories about long-term capital is when on the way out, or on the way when they were having trouble and the fund was imploding. At one point, John Merriweather, he has all these quant guys around him, all these propeller nerds, and they're all telling him how, oh no, we'll just hang in here, everything will be okay. All these arbs will go back and stuff like that. So he brings his good friend who's, from the street, and I can't remember what his name was, but they described him as he was an Italian fellow, and whereas all these guys were wearing, khakis and stuff, this guy shows up with his shirt undone and all this stuff, and I can't remember the exact way they described him, and he was a street guy, like a guy that had come from the street, as opposed to a math or propeller head. And Merriweather came to him for advice. He said, "Listen, why don't you come and have a look at my books and tell me what we're going to be like?" So he comes and he looks at it and he says, "What are you guys down?" And Merriweather says, "We're down 50%." And he says, "You're done." And he goes, Merriweather says, "What do you mean we're done? We're only down 50%. We can bounce." And he says, the Merriweather's friend says, once they see they can take you down 50%, they know they can take you down the whole way. And it was just that
don't
street
let you up.
smarts, and I just loved it. And it was just, it contrasted the math guys that thought it was all, you could make all these things equations, versus the street smarts fellow that knew that how the real world worked. And to me, that is the best part of the whole book, was that description of when this guy came and said, "You're done." And sure enough, he was right.
He was right. And so after long-term capital management, he went on to start another hedge fund. And this one was the JWM Partners. And they turned around and raised $250 million in 1999. And by 2007 had over $3 billion under management. And then came the financial crisis. And from 2007 to 2009, another nasty hit, and the fund was down like 44%. And they had to close the fund, right? And so now it's like, so now he's had two hedge funds, and both of them one got either zeroed and bailed out, and the other one had to just be closed down because of the financial crisis. So what do? You go and try again. And it turns around, and in 2010, he starts up JM Advisors. And this one, at least initially, we're only able to raise $28 million for that macro fund. So it reminds me of that Steve Carell thing from The Office, where he goes, "Fool me once, strike one. Fool me twice, strike three."
I actually didn't realize that he had made a third fund, Patrick. I wasn't aware of that, because I was looking through here and I was reading my book, The Crisis of Crowding. And for those who are interested, it's one of the best books out there. It's Quant Copycats, Ugly Models, and the New Crash Normal by Ludwig Cinciarini. I don't know if I said that right. I probably just butchered that. And one of the things that I thought was interesting is that they have a whole chapter about that second fund, that JWM Partners. Yeah. Because after the long-term capital, they thought they were going to come out of this, and they thought there's no way that it'll ever happen again. They figured out how to deal with it, and they would be much more prudent. So the fact that they lost 44% is actually kind of funny. One of the things that I realized is that, guess what? The long-term capital's leverage was 25-1. Guess what the new fund was?
Indulge me, 50-1?
No, it was 15. But the reality was that, like, it was the same thing, right? And what's interesting is that in this book, they go through it, because originally they had, when they come out of long-term capital, they said, "Oh no, these strategies make sense. We just need to trade. Our mistake was we used too much leverage. We couldn't hang in there." So they thought that they were going to come in and make these new funds, post 1999, and they were never going to go down again. And in terms of having that sort of blow up, because they were going to use so much less leverage. And it's kind of just shocking to me when you read about this, that they ended up having to close, and they had big, huge drawdowns as well in 2008, because there's the same deal. They just used too much leverage, and those trades were just not they weren't good enough. They were kind of like picking up the nickels in front of the steamroller.
That's always an issue when you're a huge fund, right? And a lot of individual smaller traders don't get this. When we're small traders, even if you're throwing around a couple million here and there, the market generally doesn't even know you exist. You can disappear in most part, unless you're talking some little penny stock or something. In most part, you disappear in the liquidity of the market. But when you're one of these big hedge funds and you're sloshing around these billions, and you're doing so with many times leverage, people notice you are the market. You become big, and someone's trading on the other side of you, and it becomes a whole different game at that level, right?
Right, and I guess just, who would have thought in 1998 that you would have 2008? I guess that's the other issue, right? We've spoken about this before, Patrick, is that 2008 came and it was out of the blue, and now 2020 came out and it was out of the blue. It's kind of, when you and I were chatting the other day, and I was laughing and saying that I must be like a cat with 9 lives because it seems like I've had multiple once-in-a-lifetime crashes occur.
Right.
And I think that's one of the things about these
Once
fixed
in a
income
lifetime,
trades.
that happens every 4 years.
That's right. These fixed income trades where you lever something up for little and then it works until it doesn't work. It's the same story over and over again.
Yeah. All right, but that's John's story. It's actually a great one, and he's going to have a place in history books, that's for sure.
No doubt about that.
All right, it's time to move on. And we're doing the WTF Clip of the Week. Now, normally we invite Taylor on here, but he's on vacation. It's still the summer, but he was kind enough to still put together a video, WTF video, but it may actually be the best one he's ever made.
I completely agree. I think it was the best one.
I don't mean to work this up, but...
Yeah, I know. We shouldn't work it up. It stinks. Let's watch it.
Let's just watch it. Okay.
As chairman of the Federal Reserve, Powell is among the most powerful people in the economy. We asked Chairman Powell, has the Fed done all it can do?
You know, I have to do something, don't I? Yeah, I really have to do it because I can't live with myself if I don't.
He cut interest rates to near zero.
You know, you can sit here and wish it was different, and then you look at it and you go, okay, this is it. All right, okay. And there's that moment where you go, yeah, look, you're on board or you're not on board, okay? But just, if you're on board just like the rest of us.
I was speaking to a former official of the Federal Reserve who said, V-shaped recovery, off the table. There's no chance.
What a beautiful thing, because maybe one day it'll be like that. I do what I can, and I do it the way I do everything. There's nothing part of the way for me. It's just...
It's so good, man. It's so well done.
It's like, how could it like Tom Cruise just executes perfectly for that overlay. It's
Well, it's Taylor that did it.
yeah, of course he had,
like
oh, wow.
he figured it out and he put it together so beautifully. When I'm watching it, all I can think about is there's this Jonathan Colton musician and he's got a song called Tom Cruise Crazy. and it reminds me so much of that, because listen, that guy's crazy, you know. And what better mashup than that? Thank you very much, Taylor. I'm sure you're listening.
Great job.
Best one yet.
We'll pat him on the back next week when he's back.
For sure.
All right. So, all right, Kev. Now, let's talk the top 3 things to watch next week. Now, normally we review the past ones, but we really haven't done this for now like 3 weeks.
Yeah.
And so let's just jump
MIA.
to the new ones.
Okay, sounds good.
Right. And so the first thing, and I wanted to actually bring up lumber, but then I was thinking, well, with Julia, and I'm thinking, no, we got to save this because this one is in a league of its own.
Listen, Patrick, I was bullish the home builders. I was bullish on the housing bouncing. I think since we started this show, I've been bullish on this, right?
Yeah.
I think we had some bets along the way about home building stocks. And I view this as my greatest mistake in that I wasn't long lumber. Really, honestly, it's been the best trade of this whole cycle.
Look at this. I just overlaid Apple with lumber. Lumber blew Apple away.
Yeah. Lumber has been the greatest trade that nobody talks about.
No one noticed.
Well,
no one
listen,
noticed.
some-
Our
yeah.
market huddlers know, but
Yeah.
like what a run, and it creates that midpoint consolidation back in July and just launches. I mean, from like basically 500 up to 750 in the last not even a month.
I don't even know what to say about it.
The home builders, I mean, okay, yeah, Home Depot and stuff like that have been going, but the home builders have been doing well, but not this well.
Oh, yeah, no. Like, lumber has been the place to be. That was the trade. You can't get lumber. There's all sorts of stuff about, people trying to build houses and they can't buy lumber.
Unbelievable.
Listen, it was the best trade of 2020. It really was.
So far.
Nah, yeah, I think it'll be tough to beat. Risk reward, that was the trade. Think about it.
Especially
in March,
if you can lever
March,
up in the...
we could have bought it at 275. It's been a triple, basically.
250, actually.
A triple.
Yeah.
That's why I like it. Tough to buy
so
it.
the question, though, is it over?
I have no idea. Not a clue.
You know what? I'll tell you what. I think we just Gucci'd it. Right, like I honestly think that. Look at that little a red candle at the top there, with the big wicks on either side. That might be very close to its short-term swing high. I don't want to officially say that that's a major high, but
after this
I think that
Patrick,
the fact that we're talking about it, like it's sort of the only thing that could Gucci more if I brought up a macro voice is the. But if
you said that, not me.
but it may very well stall here because we brought it up, and maybe
very well could be. Listen, it should. It's got it. It should along the way. But who
maybe
knows?
$100 to the 650 down to the downside. We'll see.
Okay.
Yeah.
Number two.
So number two, next week. Well, you know what? The one interesting thing, before we talk about specifically European PMIs, it's like last year, August was full of action. There was tons of stuff going, and it seems like this month of August so far, it's just quiet.
It's a snooze fest. Today was the slowest day of the year, Patrick.
And so we're in a situation where we're now like, is it going to even move? Is there anything that's going to happen here in August, or is this like a post-Labor Day thing going on, right? And it's like when we're trying to talk about like what economic data could move the needle, and it's like I was like, maybe we should talk European PMIs, and you're like, that's probably not going to do anything, right? Like, I don't know. Like, I
don't know what will do anything. The market's just like on a one-way.
But maybe it's not economic data for at least traditional metrics that we put on.
I completely agree with you there. Agree with you there.
So it's going to have to be something a little bit bigger to kind of spook all investors and traders.
So I will tell you one thing though, Patrick. I think that August, everyone thinks that they're quiet and sleepy. A lot of times they actually end up being volatile. And if you think about the flash crashes, I think one of them happened in August. Yeah. You get weird things that happen, like we were just talking about John Merriweather. Long-term capital occurred in August. I think that August could surprise everyone, and it wouldn't surprise me if we ended up the last 2 weeks of August of some action coming out of nowhere, and I suspect that it will make no sense because there is no liquidity out there. So it'll all of a sudden just be like, boom, where did that come from? Why? Nobody knows.
So you don't think it'll be quiet until Labor Day? You think that the shitstorm's coming?
I would be wary of shorting vol in here. I wouldn't go and say, oh, it's going to be quiet. Like, no, I wouldn't want that. In fact, I would probably go the other way. If gun to my head made me choose, I would choose that there's probably more action, which means it is going to be the slowest 2 weeks you've ever seen. And all the long vol
you said it, not me. I was going there.
Yeah,
I was going there, but you said it. You knew I was going to say it, so you decided to say it.
Nobody knows the pain of being long theta or long options until you're sitting on a desk with your big, huge, long vol book, desperately trying to make back your theta on a market that's barely moving. You just don't know the pain. Nobody it's hard to explain. But it is actually almost as painful as being short vol in the craziness. And in fact, I would rather take the short vol in the craziness because at least there's opportunities to make money.
Yeah.
And whereas when it gets quiet like that, and then you're long vol and you just bleed every day, and it's just
it's a hard carry. It's a hard carry. So number one. Well, there's at least a few segments of the market that are still playing pretty hot. And particularly, I wanted to just touch on Apple and Tesla, which both in the recent weeks announced stock splits, which on first move was interpreted bullishly because overall, often there's been a pattern through the many decades that when a company stock splits, it usually, at least the theory is that smaller traders can access the stock, and there's a wider market that can access it, and therefore it's more bullish. And so initially, the first reactions on both Apple and Tesla on the news were very bullish, and they pushed higher. And so we asked the question, what's next? I mean, do these things follow through? More importantly, I'll ask you it this way, Kev. Do you think there's a chance that it's once the splits happen at the end of the month, that it's a sell on news?
Who knows, Patrick? This is the stupidest thing in the world that these things have rallied like it has. Like, what has Tesla put on since the stock split? Like, isn't that wasn't it like
it went from like
13
$13.50 to $16.50, $300.
Yeah, on stock split. First of all, think about it. Like,
Yeah,
you can
right
buy.
here, this
you can
move.
buy. What is the? I listened to it, and you can buy fractional shares at places.
Yeah.
So it's not like it really matters.
Yeah, if you're like a Robinhood, you can buy. You could buy.
Well,
the
but
fraction.
really, seriously, do you think that someone, if you can't afford, like, you can trade one lot of Tesla? So really, does stock splitting really do anything?
If you buy one share at $16.50, or you bought 5 shares at $300 or whatever.
It used to matter because commission was $50 a ticket.
Yeah, now it doesn't even matter.
Like, anyways, yeah, it's the.
So do you think it's a sell on news? Like, do you?
I think it's the dumbest thing in the world that these things rallied because they announced stock splits.
But that's just like Pavlov's dog. It's like people are
the dumbest
trained.
thing in the world. Dumbest thing in the world. I saw someone saying the other day that they thought it's going to be 7
I'm bullish
times.
pizza because I just sliced it from 8 slices to like 16, right?
Yeah.
Like,
Someone said the other day, some Robin Hooder on Twitter said that now the indexers are going to have to buy 7 times as much. Like, honestly, that's what they believe. So it's like, what? How do you compete with that, man? Like, what do you when that kind of shit is flying and is actually getting eaten up? Like, what are you gonna do? You just sit around and you just try not to get crushed being short.
Because when you split it 5 for 1, that means the market cap just went 5 times larger, right?
Yeah, right, exactly. Anyways,
it's
so
the easiest way to increase the company's market cap. Right?
I think it's nuts that this thing is that this thing is happening and that people are falling for this. And I've been arguing for a while that this was like 1998/99.
You were right.
This, stock splits causing a stock to rally 20% in 2 days. That's like 1999 all over.
But if it's 99, then Apple still has to go to 550 or something. Like if we need to have some stupid blow off.
It could be.
Stupid has to get stupider in order for this to be truly 99.
It could be. I'm not going to disagree.
And
by the way, I was just trying to figure out a good 1999 song. And this was a terrible year for music. This has got to be one of the worst years I've ever seen. Have you ever Googled 1999 music tunes? Like they're awful. I Want It That Way, Backstreet Boys. That sounds like something you'd like. Anyways, I think it's ridiculous. It feels like 1999. I'm not going to say that this is the top or that the actual splits are going to cause it to be the sell on news, because who knows, they'll probably come up with some other crazy thing. Like, did you see the other day that this is kind of off topic, but it's kind of fun to talk about, that Portnoy invited the Winklevi to his house to talk Bitcoin?
The twins?
Yeah. And they started talking. Yeah, they went. And he started talking about the Winklevi, started telling him how Elon Musk was going to go to the moon and mine it and bring gold back. And that's why the shit that's passing as knowledge now is unbelievable. Look at it. Folks even listen to us.
There
Patrick.
was some sort of Twitter video today, like out there, where they were showing the Armageddon scene with all their heads pasted on top of them. Dave Portnoy and the twins.
Yeah, that was the one.
Elon
That
Musk.
was the one. Now there's a good movie, Armageddon. Poor Bruce Willis though. And Liv
All right,
Tyler, everyone's all happy because he saved the world, but little did there's Liv Tyler and her dad just died. It's important. Listen, that's a social commentary. It's a very important movie. Okay, so anyways, I think we this is very much a vacation show. Here we go. Do you want to do the parting wisdom or me?
Oh, you go for it.
Okay, so Linda Rasch, we don't know how to say that. We butchered it again. The reason I'm doing this is because Patrick would butcher it even worse. The most difficult task in speculation is not prediction, but self-control. Successful trading is difficult and frustrating. You are the most important element in the equation for success.
Right.
It's true.
It's following trading rules is so important, and discipline is so important, because it's whenever we stop following our known rules that work for trading, that we always find some way to dig ourselves into a mess.
Yeah.
Right. And so being disciplined and self-control is often one of the important ways of navigating that chaos. Right.
As I get older and more mature, Patrick, I realize that trading is less and less about the market and more about myself.
There you go.
There's a little
So
Kevin Muir
maybe
wisdom.
we should have just your wisdom
Yeah.
here instead of Linda's.
There you go.
And that's
Okay, well, let's wrap this thing up.
really valuable.
So I just want to thank everyone for listening. We really appreciate spending the time. We know there's lots of choices out there, but it's been a pleasure. We have fun doing this, and it's fun that you guys also spend the time to make it this far. So if they want to follow us, make sure you follow us on Twitter at The Market Huddle. Some bastard grabbed the Market Huddle on us, so we have to stick the at the front of it. And Patrick, where can they find you?
You can find me at Patrick Ceresna, and you can also follow me at bigpicturetrading.com.
And for myself, you can find me at Kevin Muir. And if you want to check out my letter, you can go to themacrotourist.substack.com.
All right.
Thank you very much for listening, everyone, and have a great week. We'll see you next Saturday.
Thanks, everyone. All right. Another show in the bag.
Yeah.
Lena, jump on here.
Hi.
It's
I lost our script for the end there, so
no, it doesn't matter. Whatever. So now I'm curious. Are you going to give a 9 handle to this beer, Kev?
Oh, for sure. This beer is awesome.
Wow.
This beer is like my what's the one that I love? Granville Pale Ale.
Yeah.
Yeah, I kind of notice the pale ales are
your thing.
I like the dry pale ales. I think that's what I like. So I'll just get it out of the way. It's definitely got a 9 handle. It's going 9.3.
9.3.
Wow.
Yeah.
That's
Wow.
and for our newer listeners, that's a pretty big deal. Like Kev's pretty picky about his beers.
Yeah.
Very selective.
What do you think, Lena? We'll let you go next.
Yeah.
I think it was delicious. I would give it an 8.9.
Nice.
Yeah.
How about you, Patrick?
It was really good. I you know what? I don't want to take your thunder. I'm gonna just I'll give it an 8.5 just so that your score stands out. I have a little bit of bias there, but it is delicious, and I recommend all of our listeners that can get it. It's pretty awesome. It's good beer.
And just so you know, I was in Nova Scotia. I approached some different sponsors, and we are going to have some new beers to try.
What?
Yeah,
Nice.
we got some.
Looking forward
East
to
Coast.
We've got the sponsors are sending beers now. Like I think we have at least 8 sponsors lined up. Like
Yeah.
it's getting crazy. And any of our listeners that want to recommend a brewery to us, make sure you tell them about us, and we just it's not hard to just reach out to us and we'll sponsor the beer. It's awesome.
So I asked Julia, and I feel like we should ask Lena.
Uh-oh.
If you could talk to your animal and it could talk back, what would you ask it?
What would I ask her?
Her, yeah. So for those who don't know, Lena is a new proud mother of her dog.
She's
Dog
a
mother.
year and a half.
Are you not?
But
Oh, is it a
anyway.
year and a half?
Yeah, it's already been a year and a half. Yeah.
Gosh, it seems like just yesterday you
So
were buying
fast.
that dog.
I know.
Yeah.
What would I ask her?
Yeah. What would you talk about?
Probably the fact that, she used to cry if she couldn't see me, right? Like if I was out of her vision, she would cry and she would look for me and things like that. I don't know what happened, and I'm assuming something to do with hormones, because after she had her first heat, ever since then I am.
You didn't get her
like,
spayed?
No, we want to breed her.
Oh,
So-
wow, aren't we fancy? Okay.
So after her first heat, she's all been about Luke. Like I get nothing. I get nothing from her.
Holy smokes! So
before her first heat, when I wake up, if we make eye contact, she's all over me. She's licking my face and waking me up. She's so happy to see me, and all this. And now it's like if I wake up, she just kind of pokes her head up and goes, "Okay, you're awake," but she goes back to sleep. But as soon as Luke is awake, she is all over it.
Wow. Did not expect that. So you would like to chat with
Testosterone.
her
It's
and
Yeah,
find
it's like,
out
what
what's
happened
going
there?
on.
Yeah, what happened there?
I understand. That's like one of life's little mysteries.
Yeah, she's a very jealous dog also. So if Luke and I are kind of close, if we're touching elbows or something, she's right there. She's right in the middle.
jealous.
So
So we have a jealous dog.
Yeah.
So we have
Oh.
a big Newfoundland. Well, not a big Newfoundland. We have a Newfoundland. She's actually a female, and she's small for a Newfoundland. She's only 100 pounds. And we got her from, we went to Cleveland to get her. My
Wow,
joke, we
American
actually
dog.
picked her up there. My joke is, I got to tell this joke. My wife, after our previous two dogs, we had bought like purebred dogs, and then, got them from the breeder. And when they died, she finally said, "I want to rescue a dog." And so I said, "Fine." And she said, "I want a small, non-shedding dog." And I'm like, okay, well, that's what everybody wants, right?
That's a fail.
Yeah.
That's what I have.
Well, yeah. So this is the joke, right? So, we're waiting. We're trying to get. She decides that she wants. What's the dogs that Barack Obama had? A Portuguese water dog. So we're trying to rescue a Portuguese water dog, but they don't need any rescuing. People are paying for those, right? So we kind of start going, well, we'll have to go and change this, right? So she starts looking around, and she goes onto the internet and falls in love with Newfoundlands because they're such good family dogs. Like there's pictures of them crawling all over, kids crawling over it, babies crawling all over them, and they're so patient. And so she
they're good
says,
with kids too, yeah.
I want a Newfoundland. And I said, okay. And I grew up with big dogs, so that's good for me. But I kind of thought to myself, is this like how she ordered a tall husband with a good set of hair? Because how did we go from a small non-shedding dog to this big huge dog that literally she goes in the back of the car? It looks like something's died back there because there's so much fur on the back of the car. Anyways, she's a great dog. But the joke is, we went to Cleveland to get her. She actually came from a Kentucky kill shelter, and they basically took the nice, good dogs that they felt that they could place, and they brought them to Cleveland, and then so we drove to Cleveland to pick her up. And my wife always jokes that she has a Kentucky accent. So when we always talk about what she's thinking and doing, we always put a Kentucky accent on her. So I would love for our dog to be able to talk to us for half an hour so I could confirm that she has a Kentucky accent.
There you go.
What does a Kentucky accent?
I can't do it. My wife does it really well.
Oh.
And then my wife jokes that the cat has a Parisian accent. You know how because cats are kind of
Snobby.
snooty and stuff. Not that Parisians are snooty, but
They're very
Nice
selective.
save there.
yeah. Well, there's no Parisians listening to us. They wouldn't stoop to this. How to save it and then throw it right back in the fire.
That's right. That's have a
Okay, well, that's nice. So, Lena, have you watched anything interesting that you can tell us about? One day we're going to be out of COVID and we're going to actually go and we'll have other
See each
things to
other in
talk about.
person?
People will go to movies and stuff. But in the meantime, this Netflix or Amazon Prime or
Wow.
whatever you're listening to is always a big hit.
Well, I've already mentioned to you before I've finished Netflix, so I'm done with that. And I actually went back to watching The Newsroom.
Oh,
on
that's a
HBO.
great show.
Oh, such a great show. And, you know, the way they speak, it's like music to my ears.
Yeah.
And, it's a
So-
great show. I'm making Luke watch it, and he's like, wow, this is a great show. I'm like, I told you, it's a great, great show. You never want to watch anything I want to watch, but here it is.
So that's Aaron Sorkin, right?
Yes.
So now you're too young, but before The Newsroom, there was the, what is it? It's not the White House. What is it called? One second. Get another one. Everyone's
The West
probably-
Wing?
West Wing.
Yeah.
Have you watched that?
I've watched a little bit of it. I think I was too young to.
Yeah, so you should go
grasp
back.
the
I watched
whole
the
thing,
first
but, yeah.
You should go back and watch The West Wing. The West
Yeah,
Wing
I
is
think
every
that's
bit as
gonna
good
be
as
my
The
next
Newsroom.
thing. Yeah.
Well, that's great.
I like his dialogue and writing and things like that. So, yeah. So that's what we're watching, rewatching stuff because, yeah, we finished everything.
He actually as well does Billions,
Oh wow.
which I don't know if
that.
you watch, but
I don't know. Billions, I did, but I didn't really pay attention. But that makes sense now.
or he's not. He doesn't do Billions, but he's involved in Billions somehow. I think.
Yeah, that makes sense. Smart dialogues, these people.
Yeah. So I love.
could
I
speak
love
like
the
that.
ones where you have to actually pay attention to the dialogue because it's so fast.
So fast and it's all smart talk.
Yeah.
So, or,
You don't even
or
realize there's a
stupid
joke
to
there
watch
because they
it.
don't put in a laugh track.
We need a laugh track for Huddle because I don't think our listeners know when I'm trying to be funny.
Well, we're never funny. That's why they're shooting a
That's-
laugh track.
Lena, that's your new project. We got to
Yeah,
put a
that's what
Marky
Lena
Huddle
needs
laugh
more
track.
editing. She's gonna love that.
Oh yeah. Yeah.
I think
it right now.
that's it. We should have a vote. All of our listeners that made it this far into the podcast, what we need to know is whether or not we need a laugh track. So that's
No.
You know what? We need a laugh
let's
track.
just have a vote.
No. We should get a laugh track when Patrick makes a technical call and says something, and then it just like just all of a sudden laughing.
That would.
Now that would be funny.
That might be. That would be funny.
Okay, well,
Okay.
listen, guys, my pizza's upstairs. I want to get
yeah.
going.
all right.
Have a great weekend, everyone.
Yeah, have a great weekend, everyone. It was a good show.
Yeah, it was a great show, everyone. Thank you for sticking around. We'll see you next Saturday.
Yep. Take care, everyone. Cheers.